Okay, welcome back to the new normal, our weekly interview series on COVID-19 and its impact on business. I'm Pavan Muzumdar, Automation Alley's COO, sitting in as your host this week for Cynthia Hutchison. With so much uncertainty in the economy during this unprecedented COVID-19 health crisis, financial planning and communication are critical pieces to any company's survival. Today, I'm joined by Hitachi Business Finance President and COO, Mike Semanco, to discuss top financial priorities for businesses as they restart operations. For those who know Mike, he's been a leading member of our region's business community for a very long time. Mike, thanks so much for joining us.
Oh, thank you, Pavan. This is awesome. Thank you.
So before we get started, Mike, tell me how you're doing during this weird time. How are things for you?
You know, it's certainly been interesting. We started early in the process in March as we started looking at this work from home scenario, obviously from a staff standpoint. Because for us as a business owner with having, multiple offices across the country, hundreds of employees, we had to make sure that our employees were safe. So that's the first thing that we focused on. So the work from home scenario, instituting different technology into our business. And then once we kind of got into that rhythm, the next thing that we did was reach out to all of our clients and ask them how they were doing. Because in our world, that we're in that small middle market lending space where companies rely on us for their working capital requirements. And our goal was to let them know that, we're actively doing business. We're going to make business as much as usual as possible that we were doing before, and really allowing them to reach out to us if there was any issues, and having them feel like they had a partner that they could rely on. And they weren't doing this alone, because every business owner was in a position where it was so unknown.
Well, great. Well, thank you so much for that. Well, with that, let's just jump right in. So tell me a little bit about Hitachi Business Finance and the services you offer to help companies. And then, what industries are you primarily serving?
So at Hitachi Capital, we do a lot of different things across the country. Within our division, Business Finance, we're focused on that small middle market company, typically with sales between 1 and 50 million. And they're typically manufacturing, service, distribution, wholesalers, so really a generalist. And we tend to leverage the company's assets to get them working capital. So we focus on receivables, inventory, and equipment. And we tend to do that for not only the smaller, high growth, just getting started business, but we also do it for the $50 million company and larger who need more flexibility and a little bit more kind of creativity in their financial structure than what they can get through traditional means. We're not a bank by any stretch. We're more of a commercial finance company, and we have different options within Hitachi that we can bring to the table for our clients.
Great. Thank you, sir. So before I ask Mike the next question, for all our listening audience, you'll see a Q&A panel or Q&A box in your chat. Please feel free to ask any questions, and we'll pick them up as we can. And even if we might not get to all of them today, we'll figure out a way for Mike to be able to answer those questions after the episode. So Mike, as companies began to reopen, you mentioned, when this thing started, you started this outbound calling program campaign, whatever you want to call it. What was the number one question you were getting from business owners?
I think the number one question was, how are you guys going to handle my business? So there was a little bit of a concern, right? So we came off of the Great Recession, and companies didn't know where their lenders were being positioned. So the first question was, how are you going to continue to help me with my business? The question we asked them was, what is their cash need? And have they gone through that analysis to understand what they're going to be positioned for going forward? And again, it's kind of an unknown situation, but were they being prepared, or were they preparing themselves to get there?
Interesting. And then now that we are several months in to this pandemic, what are you hearing from customers now? What's going on?
Yeah, the restart is interesting, and I think companies have realized all along the way, and any business owner kind of gets told this and understands it, is cash is king, right? So they have to focus on that cash model, and we really really relied on resources that we were able to give our clients for kind of this 13-week cash flow model is really what we were driving on. Because business owners, tend to look at, and everybody was really moving pretty well in, last year, January, February, and then all of a sudden things stopped. So when we were talking to clients, telling them, a 13-week cash flow, looking at the current period as best as possible would allow them to get their arms around what the cash need was, because that was really what was going to be driving their business. And we're seeing that going forward. And the restart is, now they're starting to see some opportunities. Businesses are starting to open, but having that plan in place is going to be key to get them from where they were to where they want to be, and how to really handle the next stage of this reopening process.
It's interesting you mentioned reopening, but if you've been following the news, there's several states in which some of the counts have been rising, and then there's this concern of a second lockdown. I mean, we hope it doesn't happen, because that would be disastrous. But if that does happen, what are you advising companies? What can they prepare for a second lockdown?
Well, I think one of the documents that we've asked companies to prepare for us, or if they're looking at their suppliers, their customers, is really this. We call it a COVID impact document. Mm-hmm. So really taking an analysis of the last 90 days and how did they transition from where they were in 19, early 20, what happened during the last 90 days and how their business was impacted. And business impacted was customers, vendors, stakeholders, their lenders, and how did they deal with that? And how did they come out and prepare for that reopening, the first reopening, right? So we're hoping that there's no other lockdowns, but I think having that impact document in having a kind of a real look back as to how did we deal with it, how do we set up the new protocols, and what is our new business normal, will help them and help all of us from a lending perspective look at where the next stage is going to be if something were to change.
Yeah. I have a follow-up question on suppliers and vendors, but something you said prompted a thought in me. I was listening to a podcast, and one of the things they mentioned was in some of these companies that are working to, negotiate the covenants with their lenders, they're creating a projection called EBITDA, where it's EBITDA with a C, with before depreciation, amortization, and coronavirus. Are you seeing any of that at all in the work that you're doing?
We are, and we've actually done that for ourselves. So from our business perspective and our budgets, we do 3-year budgeting plans for our company, and we're adjusting this year because you have to look at it as, again, 19 was pretty good. Whatever you projected in 19 for 20 is completely off the chart. But having that add back or the deletion or acknowledging that there was an impact to your business is really key, because now you can kind of focus on, all right, if this were to happen again, or if this didn't happen, how can we position ourselves? And it's knowledge, right? So the more knowledge and the more finite we can get in the explanation to the lender, you're going to be able to allow the lender to give you accommodation. So maybe waiving that covenant or giving you a little bit of a relief in the future, because they know that this is an unprecedented time. And if you can document that, it's going to go much longer. If you can look at it as, I'm not sure, and you kind of throw up your arms as to what happened, then there's going to be more resistance in being helpful, being accommodating.
It kind of goes to show the strange times we're living in, because EBITDA was supposed to be a joke. And now it's something that people are saying, well, maybe that's a practical way to start looking at this, because it's such an unprecedented thing. So coming back to you mentioned suppliers and vendors, right? So what are you advising companies, especially your clients, on how they should communicate with suppliers and vendors?
We're looking at it as this is a new norm for everybody. So one thing that we see with entrepreneurs is the mentality of, I'm kind of in this myself, and I'm running my business myself. My suppliers, my customers, they have their own business. In this environment, one of the things we're telling our clients is that we're kind of all in this together. So your suppliers, your customers, we're all facing strange times. And they, your customers, your vendors, are also having challenges. So they may be reaching out upstream, downstream for their business and looking at how they can partner with or look at different terms, because a lot of this is going to be based upon, if you're a supplier in the manufacturing industry and you're looking at your supply chain, are they disrupted? So talking to your suppliers, looking at how they've been impacted by this and create this collaboration model. So we've seen clients go to customers and talk about, are my projects going to be postponed? When are they going to start up? So that they can do a little bit better cash planning. On the vendor side, looking at alternatives to say, I've had these 5 suppliers before, can I look at others who maybe have entered the market and have looked at this as an opportunity to do new things and do things differently? So that's what we're talking to the biggest advice we're giving our clients is making sure they open up dialogue and open up lines of communication, because this is different times. And to be able to talk freely to your customers and suppliers, you may have not had that before, but in today's environment, it's much more receptive.
Yeah, excellent. We have one question, but before we get to that, I want to move the question to a slightly different perspective. Same thing about communication. What are you advising business owners relative to communicating internally to employees and team members? What's, I'm sure they've had some conversations, candid conversations with you about things like that.
Sure. We, early on, we actually put together it was a daily assessment of our COVID environment. Because we have offices across the country, each office had to do a work from home kind of COVID update to allow our corporate team to know what we were doing with our staff. And then what we set up internally was weekly calls. So letting people know every week where we're at, what we're working on. And really the business owner is in a position where their employees are the key. We're always a key asset. But in today's environment, it's different, right? There's different needs for our business owners, remote workforce or technology needs that happen. So communicating with employees, letting them know that obviously their safety is key to this. And knowing that the efficiency of how they work is going to change. Not being in an office, working from home, there's different variables that everybody is faced with. So having that sensitivity to your workforce and your staff and giving them a little bit of freedom to do what they need to do in order to complete their responsibilities. Giving that freedom, I think, puts them in a position of less stress, because in today's environment, stress is huge. It's off the charts. So the more that a business owner can relay that kind of less stressful environment to their staff, I think positions the company to work through any challenges they have and to position themselves better as we really continue this going forward.
Yeah, isn't that the truth? Yeah, stress is one of those. It's almost like this pandemic below the pandemic in a lot of ways, right? Yep. So we have a question from one of our audience members. What should companies do to prepare if their current lender does not support them in the restart?
So we're always looking at, if companies, we do get companies that come to us as an alternative funding source to their current lender. And the first thing we ask is, have you talked to your lender about accommodations or changes that could be made within your loan structure to stay with your current lender, because obviously there's a relationship there. If there's situations where the current lender is uncomfortable or whatever the case may be, there are many different resources out in the market. And first thing I would, a lot of companies don't know where to turn. So leveraging your industry connections, leveraging your associations like an Automation Alley, and other folks that your banker, your CPA, your trusted advisors, I would reach out to them and ask them what they're seeing in the market, because they may be working with different lenders, not only banks, but commercial finance companies like us that have a different credit profile and don't mind going through a little bit of more of a challenging environment versus a traditional source. So there's a lot of options out there, but talk to your trusted advisors, talk to folks like Automation Alley, and really inquire with them as to what they're seeing in the market.
Yeah, and talk, I would think, to you, to be someone like you, because you're one of those resources that sometimes might be able to help in those situations, I would think.
Yeah, absolutely. And I would say, a lot of times we're certainly not helping everybody, and that's not, our profile is a little bit different. So we love meeting with companies. We love providing direction. And even though we may not be the lender that ultimately helps them, we enjoy putting them in a position where they can be successful. And that's that's our role in the market.
Yeah. There's another question from one of our audience members. The question is, we see that banks and lenders are substantially cutting credit lines and denying most new loan requests. What's your take on this environment?
We saw that happening in the Great Recession. So very similar process. It's starting a little bit earlier than what I kind of anticipated. I thought that we would run through maybe September timeframe once the PPP loans kind of went through the process. But the banks looking at tightening credit, kind of staying put, that uncertainty that you mentioned about future lockdowns or whatever the case may be. I think that's weighing on everybody's mind. So I would get out ahead of the curve. So if a business owner has any type of indication that things are going to start tightening, or conversations you've had with your lender or others, start now. So start putting together that 13-week cash flow, put together that COVID impact document, and open up the market and talk to other lenders and see what they're doing in today's space. Because we went through a similar process in 8 and 9 when the banks tightened up. They pulled lines of credit from folks. Some stayed in and very receptive to that market, but there was others that were kind of caught in that limbo. And the ones who got ahead of the curve a little bit and started creating alternatives on their own fared much better. If you wait too long into the process, and as we know today, where cash is king and that restart process is going to cost companies money, the last thing you want to do is have softer sales coming out of the last 60 days, start growing really fast, and not have your bank line be able to support your growth. That's the worst case scenario. So now that we're in that, we're not quite sure what my lender is going to do, first talk to them. Second, don't hesitate to go to the market and talk to others like us, like other banks, to really get a sense of how they're going to handle you going forward. Because you don't want to be left, searching at the 11th hour. Yeah.
So interesting. I see a common theme in everything you're saying, which is communicate, and obviously prepare and plan on the other side, so that your communication has some real value. So let's talk a little bit about customers then. What tips or insights do you have for business owners as they deal with customers in this situation?
Yeah, I think it's letting your customer know where you're at in the spectrum, because your customer is going to have some concerns about their supply chain, right? So being proactive, reaching out to your customer, asking them about if you have contracts or projects in place, asking them about their timeline. Also inquire with them about, what else are they working on? Because as some of our clients were essential businesses over the last 90 days, they were able to take their kind of current model and adjust it. So there was companies who made fixtures for different component parts, and all of a sudden they started making the same fixture for ventilators, right? So they picked up these new opportunities. So having that communication with your customer during this 90-day window, they may have landed different contracts or projects that you may be able to help them with. Well, that's one side of it. And two, having that, kind of direct conversation about, what is their payment cycle going to be going forward? So are they going to be changing their terms? Are they going to be expecting different things from their suppliers? And that just allows you to plan better. And we've seen, both scenarios. We've seen scenarios where customers are extending terms, but they're also offering early pay discounts. Mm-hmm. So don't be afraid to ask your customer where they're at. So then that'll help you plan for, again, cash flow. If they stretch terms from 60 to 90 days, now you can start looking at and talking to your lender. There might be a little bit different loan structure that you may need in order to accommodate that extra term, or they might be able to pay you faster and take a discount, and now all of a sudden you have cash in your pocket. So again, it's being proactive, and don't be afraid to have those direct conversations with your client.
Yeah, and I would assume that, as a supplier, you probably want to get as much insight as your customer would let you have on their
Correct.
cash flow cycle, i.e. their customers, are
Absolutely.
they getting paid in cash? Are they getting paid on terms? How's their cash flow? Because that cash flow is going to directly impact, you getting paid on time. So
right.
We talked a little bit about suppliers before in terms of the cash side of things, but what about the supply chain? We've seen some pretty significant disruptions.
Mm-hmm.
And those disruptions can also create cash flow issues, right? So if you're selling something and if it's on back order because your supplier doesn't have it, that creates a cash flow issue. How have you seen any of your customers handle this in a creative way? Any insights on that?
Yeah, I think we've seen it a few times where, they have talked to their suppliers, and if things are delayed or pushed back, they have gone out to the market. They've always had most, especially manufacturing companies, manufacturing services is our two biggest industries, but they've always had kind of a tier 2 type supply base that they focused on. And I think more of them are now reaching out to that tier 2 and looking at them as potential tier 1. So their main suppliers, if there is a lull or shipping delays or not being able to get product, I think they're looking at that tier 2 that they had kind of on the back burner before, and they're elevating it. And so they're having those extensive conversations now and looking at different ways that they can work with these companies that they didn't necessarily have on the radar screen before, but now they do, because they have different connections and different avenues to get that product.
Yeah. So so while we had communication as one of the themes that we're seeing, creativity seems to be the other theme that's kind of rising up to the top, right? I mean, we're in a situation that we haven't seen before, at least in our lifetimes.
Sure.
Talk to me about if you have a good example of a creative financing situation where, traditional bank financing wasn't an option, but a business owner with your help and maybe some other sources of capital were able to kind of figure out a path forward, because I think that would really help some of our audience members on looking at things a little bit differently.
Yeah, I think we're so there's a couple scenarios, us included in the process, and then the scenarios where we weren't involved in the process. One scenario was we do have a current company that we're working with that does have bank facilities in place, but one of the things that they asked us to look at is their suppliers. And they want to conserve cash, but they also at the same time have suppliers who take discounts to get paid early.
Mm-hmm.
So for them, they're looking at, company A is looking to conserve cash. They want to stretch terms. They don't necessarily want to go to their supplier and tell them that they're not going to take the discount anymore and pay them early, because that impacts, their world from a supply chain standpoint. So one of the things that we're doing is we're actually working with this company to be their payable source. So we're actually going to pay on their behalf to their suppliers. So we would step in and make payments to their suppliers at that net 10-day period, but allow them to go from a net 60 to a net 90 with us. So we'll give them a little bit of terms on that payable side. And this is a little bit larger company that we have the capability to do that for. So that's kind of an unusual scenario that we've done very few in the past, but now it becomes a little bit more of a norm for us. So that's kind of one scenario. And then the second scenario that we've seen recently is this scenario where business owners are now starting to think about, how do I liquidate my business? How do I liquidate my position in my business? How can I sell it? How can I collaborate with others? How can I bring in partners? And working with a firm that can bring in strategic equity into a business to allow them to grow, bring in folks like us that don't mind a little bit of disruption in a business where we know that, again, that COVID impact today is probably not going to be there in the future. So good business model in the past, a little bit of disruption today, good business model in the future. So we're seeing probably 2 or 3 opportunities we've worked on over the last 90 days where there's this acquisition model. So you have a strategic investor coming in, you have an existing owner who wants to take some cash off the table, and now you have a lender being injected into the middle that creates a new type of company that can then grow into the future. And we've had clients exit us because equity came in, strategic equity, recapitalized the business, and they know that in today's environment it's a little bit soft, but they see the potential in the business going forward. So the business owner that's out there, there's many creative ways. It's not a one-size-fits-all scenario, and you really have to talk to somebody who can see multiple pieces of the puzzle in order to create, the right solution for you going forward.
Excellent. That's actually very, very clever, very, very creative, very cool.
It's interesting.
And I'm assuming you can do this because you're not a traditional bank. So there's some options to get to do some interesting things that maybe a bank lender would be unable to do. So yeah.
Yeah, in today's market, we have to be creative, right? We can't do the same lending that we did back in 90 days or 120 days ago. We have to be creative ourselves. That allows us to think a little bit differently. We like when business owners challenge us. Yeah,
right. So okay, so I just have a few more minutes left.
Okay.
What's the last piece of advice? We've talked about a lot of things, but if there was one thing, if you had a direct line to a business owner, on maybe something that's missing in what they bring to you. If there was it was this like, hey, just do this one thing, and it'll be a lot easier. What is that from your perspective?
We talked about communication, creativity. I think we look at kind of 3 C's of credit, but in today's world, I think we have to talk about collaboration, and I think a business owner needs to think about the thought that they're not in this alone. Mm-hmm. So we stress a lot for business owners as they grow and as they become much larger. Always have that trusted advisor circle around you, mm-hmm. and talk to your banker, talk to your CPA, talk to your stakeholders, and learn from them. Find out what they're doing in this market. Find out who they're talking to. So that third piece of, collaboration and in figuring out, who can they lean on to help them get through a difficult time? Because we talked about stress earlier, right? So stress puts you in a position where you don't make clear decisions. But if you step away from it and you talk to others who may have been through that, they can shorten your learning curve and they can give you ideas that you may have not thought of because you're in the midst of dealing with an issue today. So the communication, the creativity, that collaboration with those trusted advisors, I think would be at the top of the list.
No, isn't that the truth? Because, in my experience, being a business owner can often be a very lonely, role. Sometimes you feel like you don't really have a lot of people to talk to, especially if you're a small business owner.
Sure.
And I think what you said is right on target. So, for all our audience members out there, as I mentioned before, Mike is a veteran. Mike understands this region like no other. I don't know when we first met. It was probably more than 20 years ago.
It was a long time. You're dating
ourselves.
Yeah, thank you.
yeah. So, so with that, Mike, thank you so much for the discussion today. How can our audience members get in touch with you if they have more questions or if they want to just meet with you one-on-one?
Sure. So HitachiBusinessFinance.com is our website. So you can reach us through there on contact forms. Please connect with us on LinkedIn so you can follow our business page on LinkedIn. Reach out to me directly. My contact information is on my LinkedIn profile. happy to chat with you. Happy to do a Zoom call or face-to-face meeting outdoors, whatever you'd like to strategize about your business. We want to be resourceful in this difficult time.
Great. Thank you so much, Mike. And thank you to everyone for tuning in today. Be sure to register for next week's New Normal, episode 10 on July 23rd, as we are joined by Jack LePan, Director of Product at Red Level, to discuss their COVID ClearPass app with your regular host, Cynthia Hutchison. Thank you, everybody.